Good morning. It's Wednesday, March 22nd. I'm Joe Elkier here with Tim Metals Murphy. Welcome back to the Gold Spot. Tim, more news going to be coming out today about inflation. Basically, we're going to be hearing from interest rates with the Fed. But more importantly, I want to talk more about what that is impacting. We've seen the banking crisis continue to grow and spread. Can you give us some updated information as far as what you're seeing and how it might impact the markets?
The public doesn't realize, going into this banking crisis is that the FDIC only had so much money on hand to insure anyway. I think the number was $200 or $300 billion, and that's with something like $8 or $9 trillion in deposits in the bank. So right out of the gate, there's not enough money to cover everybody if there's a run on all the banks. So the problem now is we've had the one big bank in the U.S. it's the 16th largest in the country, so that was real big, and it was the Silicon Valley Bank, and so because it was so big, because it's the first one to really come out, there was just a lot of confusion, and initially the Fed said they were going to cover everything. And then Janet Yellen came out later on in the week and said that they will only, cover those banks that, if they were to go under, would create a contagion, and it would be, catastrophic. So some banks are going to be protected, some are not. That's still up in the air. There's so much confusion. Credit Suisse was the bank from Switzerland that went under last weekend, and at the very last minute they got bought out by UBS. For pennies on the dollar, and the shareholders got wiped out if you owned any of the bank shares. But more importantly, the UBS has got the government of Switzerland has to back them with whatever money they need in order to stay solvent. So the bottom line is we're just printing money. We started out years ago with COVID. We had to print money. We had massive debt, over $30 trillion. We had to print more money. Now we have high inflation and high interest rates, and throw on that now the banking situation, and people are scared, like I said before, and they're calling us up. What do we do? Do we take all of our money out? Do we put it into bigger banks? Do we buy gold? I mean, this is the time to really take a look at the situation and protect your wealth, because it's a very, very serious situation we're in, and we're going to have more banks going down in the near future, and you have to be prepared.
If you're like the majority of our clients and you're very hesitant about sitting in excess cash, it's a perfect time to be giving us a call. We can help you look at ways to privatize it, protect it, have something in your possession that's had value for 5,000 years.
Learn what's going on out here. It's serious. It's going to get worse, and you have to be on top of it.
Thanks for stopping by the Gold Spot.